OPEC just shook the oil market, and it's not what you think. More supply, weaker demand, September jitters. It sounds like a recipe for falling oil prices, right? But here's the truth. History shows moments like this can create explosive opportunities for the right stocks. So while everyone else panics about oversupply, we'll show you that this is when you find those hidden winners. And today we've handpicked 3 ASX oil stocks that could benefit directly from OPEC's latest move. Now, if you're serious about staying ahead of the herd, you don't want to miss this one. I'm Philip Tortevsky, joined by analyst Pedro Banales, and we are Wealth Within. Good morning, mate.
Good morning, Phil. How's it going?
Good. I mean, we've got some big news to unpack regarding the oil space, and I know this is a sector that you are wholeheartedly in, so we are looking forward to seeing your expert opinion. But let's start off with that announcement today. OPEC signalling oil supply to increase from October. Now, I want to get to the chart of oil first, so take a look at this. I've marked up a few levels there, and what makes this time different to me, Pedro, is the fact that normally in October, OPEC cuts supply, as you can see on that chart. They've cut supply to keep prices from sliding, but in October 22, 23 and 24, we saw cuts to supply. But actually go and have a look at what happened to price not long after. It didn't really hold up. And now this October, we'll be seeing an increase to supply. And you see, if they'd cut it again this time, it would have been a defensive move in my perspective, basically admitting demand is weak. But instead of cutting, they're still adding barrels. So maybe this is a sign of confidence and not weakness. So, I mean, basically, OPEC is saying the market can absorb more oil and that they're still in control if prices wobble. And when you combine that with the oversold conditions on the ASX, it creates the perfect setup for strong oil stocks to bounce back, which we're going to get into in a second. But I mean, I want to get to that chart of oil again now, Pedro, and get your thoughts on this whole fiasco because, like I said, the last 3 times they've cut, and normally coming into this period, they do cut. They haven't this time. So it proves to show that if people think just a cut in supply means a rising oil price, well, that's not true because we've seen it through here. And maybe this time, because it is different, we could see something different unfold. What are your thoughts, mate?
That's right, Phil. Well, OPEC has really been trying to put the brakes on the price of oil decline since basically mid-2022. And as you've outlined rightly on the chart there, they've been cutting supply, trying to stop the price from declining, but the bears have been in full momentum here. And really the story around this whole period has been the decline in demand from China. Now, we have had some spikes along the way, and that's due to geopolitical events. So all along that trend there was that whole, Israel and, against Iran and all the other proxies, all those wars that was happening in the Middle East. And basically, now they're starting to increase the supply as price has now fallen to around that $60 level. So they've actually increased roughly around that 555,000 barrels per day in September. And August, July, and June, they've increased it by 411,000 barrels per day. Now, this latest news has been that they're basically going to increase it by only 137 barrels per day. So the market is seeing that as, okay, well, now it's looking like they're halting the increase, dramatically anyway. So it might actually bode well for the price of oil. And we do have a very strong support level there around that $60 mark. As you can see there, if I just round it off to that $60, multiple times in the past, like 2019, and around that, 2021, as we had that rise out of COVID, it has provided support. So we are around that level. We might, have a little bit more of a dip into there, but I suspect that there might be a nice bounce out of that level. And of course, that's going to bode well for our oil stocks in our market. So something to definitely watch.
Yeah, it's really, when you see something different, it's really time to take a look. And I agree that level of support is a level to watch out for oil. But all right, let's get to stocks because that's what we're here for. Now, first up, I know you wanted to cover off one of the big boys and we'll go from there.
That's right, mate. So Woodside, you can't get any bigger than that. They're involved in oil and gas. That's what I like about them. Gas is in high demand. They are in the oil space as well. So We've seen a beautiful bounce. What can I say? Of this April 2025 low, and it has made higher bases, higher highs, higher lows, and now we're just going through a bit of a consolidation period. But let's expand out the weekly chart because we know what the bigger picture looks like. So let's focus on this kind of medium term trend there. So we have broken above that downtrend line. We've found support back down along that downtrend, and this is something that you've often talked about, Phil. That when stocks are breaking out of that trend, we do expect a little bit of a retest of that downtrend before the stock comes up again. So it has done that already. That's what I like about it. It has found some resistance around that $27 mark, and now looks like it's consolidating sideways a little bit. I'll just put a bit of a rectangle there, and I would say if it holds up around that that $25 level, it might trail sideways a little bit. Once we break above that $27 level, then we're pretty much making a run to these levels up here. So I would expect the first one to be 34, and then that $40 level could be on the card in the long term.
Yeah, look, I want to get to the chart as well of Woodside, because obviously you raised a really important point there in terms of when we are seeing stocks, looking at that major turning point. Now, I've got the monthly chart up here first, and I totally agree with you. Obviously, this market's been falling for quite a while. To me, this $20, and I know you've been speaking about it in the past, 20 to 16 has been huge support since 2020. COVID, you've seen it bounce 1, 2, 3, now 4 times. But it's what comes next, right? Because after the bounce, if this were to be a bullish market, well, the dynamic has to change between the buyers and the sellers. Now, all throughout this downtrend, it's been seller dominant, less buyers. But currently, we've got buyers take out that January 25 high, really strong buying, very different to anything we saw back throughout this whole down move. And now sellers are coming through, which is nice to see, because that's going to tell us what comes next. If the sellers are quite weak and this is the start of the next bull leg, well, we should expect sellers to hold above that $22 level in a quite bullish market. And that's why we're at the precipice right now of a really important move for Woodside, which is very exciting. I've also outlined the bigger term moves that have happened since 2008, the financial crisis. And you can see, even amidst all this volatility and in a long bearish move for Woodside, generally about a 60%, like 60 down in 2009, and mind you, that's GFC territory, 41 coming in 2011, 46 in 2015-16, then 62 coming out of COVID. So 2 serious crashes and that in between. The most recent we've had is 52. So we're sitting right in the sweet spot for the amount of a decline, generally speaking, before we see a nice run up. And they're decent runs that we do get over many, many months. So, right now Woodside is in that sweet spot where if it holds significant support, it's done enough in terms of what you would expect for a down move before we see some upside. And now we're getting to the point or the pointy end where we start to see what sellers have next. I think it's a very good time to be watching this stock and waiting, because the next leg, if we start to do something like this, could in fact be that leg that runs on up and gives you the real powerful move up to that $31 where there is a bit of resistance. I'd be mindful of that. But if we get through 31 easily, then I think $39, $40 is a very reasonable target in the medium to long term. And if as you said, if the spot price does take a turn here, we could, given that's at a huge support as well, we could see a really nice turning point for Woodside. All right, so definitely one to keep an eye out on. Now, next up, Pedro, we have Karoon, but stick around because the one after that, I think, is the pick of the bunch today. But let's get to Karoon Energy now, Pedro, and have a look at that chart, because another one, if we teach a lot of this stuff as well, where if you can identify these really significant reversal points, that you're in a really pretty position in terms of getting a really nice risk to reward scenario. But anyway, take it away with Karoon.
Oh yeah, you mentioned levels. This has turned at a critical level, and I'm sure our students would know by applying the price analysis that we teach to this latest range. This level here, where it has found support at, and I would probably say roughly around that $1.20, is a critical level for this stock. You can't get any more textbook than this, and it bounced beautifully, not once but twice, off this level. So that to me is signaling strength. Much like Woodside, it has now bounced above that downtrend line. It's coming back to retest it. And, you want to talk about, reversals. There is another very critical level around that $1.60 as well, which it's getting to now. And it's also previous support and resistance. You can see even back here, if I can drag this out, it found resistance there in 2019 and a little bit back here in 2015. But focusing on this area here, I mean, this one is looking great. It is a bit of a falling knife at the moment. So I'd be just watching this like a hawk, see what happens around that $1.60 level, like I marked before. And if this one starts to turn, I think that this one is going to offer excellent upside, at least up to that previous high there. You've got a nice 33% run. So that's a nice little buffer there, just in case it does hit resistance there in the short to medium term before it continues its run up. I think that is a great position to be in with that 30% buffer. And then, of course, if you were to find an entry around there, you've got that 64% to that previous high there. So this one is great. They've got assets in America. They've got assets in South America, in Brazil. So they're positioned well. They've just bought out another company in Brazil as well, which has starting to reap the benefits of that. So it's an oil company that they've acquired in Brazil. So I think that this is going in the right direction. Great PE ratio as well, good dividends. And, like we said earlier, the price of oil does look like it's going to turn around. There's a couple of other factors to consider that, we're still yet to see the tariffs from Trump on Russia, on Russian oil, because, they've come out with negotiations which have fallen through, it looks like, because they're still attacking Ukraine. So there's tariffs that are going to come out there. Plus, we're heading into winter in the northern hemisphere, which is basically where all the demand is coming from. So Karoon is involved in both oil and gas, which I like as well. So I think that this has got the great precipice for a good run up in the short to medium.
Yeah, it just proves the point. I mean, when you look at a chart like this, and I want to get onto my chart, but it really does prove the point about how, these kinds of stocks being active and being able to follow and read the price. And I don't mean by, being super short term, looking at a daily chart or anything like that. I mean, this is the monthly chart of Karoon Energy, and you can see how volatile those moves are. And like you said, a move which may not look like much from where it is today to that next significant level of resistance is 45%. Even that high is up to 30%. So, I want to get your thoughts a little bit on because obviously I know you like this space a lot, but you don't always have to, what I'm trying to get at is you don't always have to try to shoot the lights out with these kinds of stocks. And sometimes trying to do that, having that long-term buy and hold approach can get you in a lot of trouble because it is very volatile. So treating these more as trading stocks, being able to apply your technical analysis on top, identify the key levels and trade to those levels, not expecting, like I said, to shoot the lights out. Because I mean, even if you're trading this one back off a significant pullback in 2011, some people might have thought, all right, there's an opportunity to get in here. And what often happens with the mindset is, okay, well, it's fallen from the all-time high. I'm buying it at about a 60 or 70% discount. I expect that it's going to go back up and take out the all-time high. But as you saw, it wasn't the case. And you had a lot of examples to hint to you that things weren't going to get there on many occasions. So what I'm saying is using the technicals with a stock like Karoon is going to be so much more powerful than just playing that buy and hold or fundamental game to keep you out of the fake outs and the downside. And so having an expectation, like you said, keep it a short expectation. If it can get past this high, then the next level is $2.40. If you can get through there, then you work through the next level. You don't say, I'm buying this today and I'm going to hold it for it to get back to $10 or $11, and because that's what it should do, because I think so.
Oh, yeah, for sure. I mean, this is definitely a trading stock. And if you would have bought this from the 2020 low, the COVID low, and you didn't have an exit plan, then you might be in a little bit of a win, but you would have left a lot on the table. And I'll just outline that you could have just put a nice trend line up there. and just using something from Dale's book, even like this simple trend line, would have kept you out while this whole down move was happening. And that is, from December 2023, that's 2 years. 2 years that this stock has been declining, not ready yet, that you would have been in a loss-making situation. And not only that, you're making a loss on this stock, but you're also missing out on stocks that are going up. It's an opportunity cost. And this is what we embed into our students, even from module 1. From the first module, we say we need to think about the opportunity cost if you're in a stock that's trending down. So it really is about timing. The industry likes to put into people's head that it's about time in the market. Well, that's not correct. It is about timing the market, because you don't want to be in a stock that's trending down.
Yeah, great point. All right, now on that, as Pedro mentioned, Dale's book, if you want to get an intro into the stock market, how we do things here, it is How to Beat the Managed Funds by 20% by Dale Gillham. It is free. You just have to pay the shipping. The link is in the video in the comment section. Please go and check it out. It is free. As I mentioned, just got to pay the shipping. Now, let's get to our next stock, Pedro, because this one, I think, yes, a little more on the specky side, but it does have a lot of potential. So I will let you cover off this first.
Oh yeah, this one is massive. It's not for the faint-hearted, definitely. It's not quite as liquid as the other two that we've covered, but this one is CUE Energy. Now, this company has assets in Australia, in New Zealand, and Indonesia. So they sell locally. And I do like the fact that they've got an onshore oil rig in Australia as well. So they don't have those risks, assorted to the offshore situation where you've got hurricanes and things like that can throw the rig out. So I do like that aspect, and I like the chart even more. I mean, this price action here, textbook. Again, if you guys are in module 5, or if you've undertaken the course, you know exactly what I'm talking about. If you haven't, you got to get onto it, because you need to know these types of patterns to get into the opportunities. You can't just buy these blindly. You need to buy it at the right time. So it looks like it's about to break out. We've got that 12-cent level there acting as resistance. But if it does break above that level, oh boy, I mean, we don't have a next level until that 24 cents. So this one is offering almost that 100% upside. Basically, I think that it's looking good if it does break above that 12 cents. If it does start to trend down and breaks below that 8 cent, then of course it will paint a different picture. But I mean, this one is great. Definitely, you got to be keeping an eye on this.
Yeah, it's one of those things. I mean, I'll get into my chart of Q Energy, and it's one of those things where, when you're looking at these stocks, you're right at the lower end of the scale. I'll go on the monthly chart. There's things that need to line up. Obviously, a lot more sensitive to news and all that kind of thing. But when you look at where this stock is throughout history, I mean, it's a no-brainer when you take a look at that 5.5, 6 cents. That's where a lot of the moves got going. And when the momentum builds, I mean, that's when really things can take off, and it really only builds or starts from around that 6 cents like we saw since 2016. But what makes this, like you said, and I can totally see why you're thinking this is a little more exciting than in the past, because if you line up all the previous examples here, you can very easily notice that once we break, what's happened in the past is really sharp price appreciation, test, sharp spike up, and all the way back down. Now, what you don't see is a new base forming above that, that 6 cent level until right now. And that to me is the exciting part, because what this tells you is, following this significant buying, where in the previous times in history, following the sharp buying, sellers said, no, thank you, we're coming down just as fast. That often happens during speculation. A lot of the time, that's really driven by speculative type moves. Again, really sharp move up. We don't really see a higher base. The base was at the 6 cents, comes back all the way down. But this time, there's a new base forming at around 10 to 11 cents or 12 cents. If this can break, like you said, 13 cents, it's very different to these other periods of spikes. And that's why I agree with you. This one has serious potential for another leg up and a strong one, but it's got to get moving and it's got to hold above 13 cents. If it doesn't, or if it just fakes out above 13 and starts reversing back down, if it does something like that, then be wary, because we're more than likely going back there. But the longer we continue to stay at 10 cents as the new base, then there's more hope for this stock longer term to break out into a new bullish phase. And then, as you can see, when it gets going, I think what you've said in terms of the next level is spot on. Like, I agree, 21 to 23 cents, or 20 cents if you will, would be the first target. And then after that, geez, let's not even go there. That gets even more exciting, but something to definitely keep a very close eye on. Now, if you want more hot stock tips, check out our video, 3 ASX stocks to buy with high potential in September.